Could we be on the threshold of a new market crash? Absolutely. But the big crash isn't going to begin or end in the stock market, nor the Dow Jones Industrial Average. It's going to begin and end in the debt market. And we are seeing the sell-off right now, yields rising, and that's a big red flag.
In this thought-provoking video, financial expert Greg Mannarino exposes the unsettling truth about the current economic landscape. He delves into the Federal Reserve's risky dependence on inflation, the U.S.'s dangerous reliance on borrowed money, and a major prediction about gold's soaring potential. Discover why the stock and debt markets are in danger and the potential consequences of suppressed rates. Let's listen in.
Once in a while, you get a little bit of truth out of these institutions, and they're telling us what we already know, and I hate that. Like they're the authority figures, of course, but anyway, that things are bad, things are going to get much worse. Meanwhile, as you alluded to earlier, people walk around through time and space, they have no clue as to what's actually going on, and do you know why? Because they're not following your show. That's the truth. They're brainwashed and propagandized to the highest possible order as they sit there and they listen to the nonsense, deceptions, distractions, look here, don't look here from the mainstream media. It's unbelievable. I mean, if anyone were to pay attention to that, they would have no idea what's going on because, of course, they're being lied to and propagandized. It's just crazy, really. First-time jobless claims came in higher than expected. The data is fake. We're living in an environment of fakery like we have never seen before. Again, distractions, delusions, look here, don't look over there. I mean, we've seen this kind of tactic used against the people of the world since time immemorial. I mean, honestly, towards the end of World War II, Germany was telling its people they were winning the war. The people were convinced they were winning the war because that's what the mainstream media was telling them at the time. It's an incredible thing. The same thing with, let's move into recent history. The meltdown of 2008, Ben Bernanke telling us everything was fine, everything was contained, don't worry about it. I mean, it's the same story. It just repeats itself. The data is not real, any of it. It's not checked by a third party that has any bearing on reality. The economy is in free fall. People are maxed out. It's interesting how what they did here. I don't know if this happened to you or anyone that you know, but just several months ago, these credit card issuing agencies were giving people tremendous increases in their credit lines without even asking for it. They knew that people were going to go out and unfortunately be irresponsible and melt down their credit cards. And we've seen credit card debt, household debt, personal debt, consumer debt at their highest stages ever in history. We've never seen anything like it. People are done. We have major retailers saying, hey, you know what? The consumer is done too. They're strapped. We're getting warning after warning after. We just got a warning this morning from the Wall Street Superbank, Goldman Sachs, 5 reasons to believe that the stock market is about to take a big drop here. Look, all this comes down to risk in the market, which again you alluded to earlier. Risk in this market is rising. The stock market is so disconnected from any kind of reality. I've been doing this kind of a gesture in my videos for years, saying this is the stock market and this is the economy. At one point, this is going to get very real here. Valuations don't make sense in this market anymore. Nothing does. When you have a central bank, any central bank that is continuing to promise easy money to the market, well, it creates an environment where cash makes its way into risk assets and it creates massive bubbles and distortions across the spectrum of asset classes. And that's what we have right now. We have a stock market in la-la land, way beyond that. A debt market hyper bubble beyond anyone's wildest dreams. And that's the greatest threat to everything because people don't understand. People always focus on the Dow. Look at the Dow Jones Industrial Average. No, look at the debt market, which is the driver. The stock market in aggregate is a derivative as to what is happening in the debt market. So the stock market, as well as housing and everything else, derives value from debt market action. The debt market is a time bomb. It's a ticking time bomb. It's going to go off. And it may actually be going off right now. Again, I have an indicator right on my website, traderschoice.net. It's free to everybody. I don't charge a penny for it. It's called the Mannarino Market Risk Indicator. Me and the people that follow my work have been watching this for months. 250 was the first line in the sand. We just crossed 250 with regard to risk in this market. The MMRI looks at the 10-year yield, the relative strength of the dollar, and puts it together in a neat little color-coded kind of a thing. It's so easy to understand. But risk in this market is that we have now crossed that threshold of 250. And just yesterday when we crossed, markets start to fall. Global markets overnight fell. The Federal Reserve, or those that are controlling the system, which obviously is the Federal Reserve. Who controls the economy? The Federal Reserve. Who controls the markets? The Federal Reserve, central banks. Who controls the world financial system? Central banks. It's not presidents, kings, queens, monarchs, or dictators. It's them. But, Bidenomics, of course, is working because he's telling us it is. Anyway, but the MMRI has, over months now, been telling us or showing us that whenever we got close to 250, all of a sudden a miracle happens. The 10-year yield would drop, the market would come down, risk would drop, more cash would move into the stock market. So I've been telling people for months, watch the 250 mark, watch the 250 mark, watch the 250 mark. And like I said, we just crossed it. Markets are not liking this. And I'll tell you something else, everyone who's listening. If action is not taken by central banks to keep rates suppressed more so than they are now, which is massively inflationary, by the way, people aren't supposed to know that, this market is going down a lot from here. Where's the bottom? Okay. No one knows. I mean, could we be on the threshold?
I want to bring that up.
Yeah. Could we be on the threshold of a new market crash? Absolutely. But the big crash isn't going to begin or end in the stock market, nor the Dow Jones Industrial Average. It's going to begin and end in the debt market. And we are seeing the sell-off right now, yields rising, and that's a big red flag. The market has no bearing on reality at all. And when you have a situation here where, in this case, the Federal Reserve has been artificially suppressing rates since Kingdom Come, well, since the last meltdown here, let me make this simple for people to understand. When a central bank gets in here and starts artificially suppressing rates, in other words, not allowing the market to set fair value, what it does is open up a doorway for cash to make its way into risk assets. Now, the market believed, or at least did up until recently, that the Federal Reserve was going to keep rates artificially suppressed, keeping that doorway open for cash to make its way into the stock market. And that's why we've seen this kind of jump up here. But markets always overreact, either to the upside or to the downside. And I think this is, like I said, there's no connection to reality here. We don't even know, no one is smart enough to actually know where, let's say, the S&P 500 should actually be. How can I say that? Well, because again, you got artificially suppressed rates from now since 2008, which has opened up that doorway to reinflate a bubble here, a super bubble, beyond super bubble in the stock market, reinflate a housing bubble. And again, this mechanism of manipulating rates is what central banks do. And how do they do it? Let's talk about that for a nanosecond. How does a central bank say, hey, everyone, this is what we're going to do. We're going to keep rates at X, Y, Z. They can't just say it. You see, they don't have a magical wand. When the central bank says we're going to keep rates at X, Y, Z, they have to get into the market and make it happen. Now, how do they do that? They have to buy the debt. They have to create cash out of nothing, add digits to a screen and buy the debt. That's what they do, but people aren't supposed to know this. And this is really the root cause of why we're seeing inflation around the world. You can't have a situation where central banks print and add digits to a screen in any amount they want to, and we, the people, have to pay for this in the form of inflation. Again, it's very simple to understand. It's economics 101. You have all these extra bills in whatever form they exist being created to do whatever they want with them. The Federal Reserve does have a trading desk. The New York Fed has a trading desk. And yes, the Federal Reserve does buy large cap stocks to prop up the market. On top of, that's the plunge protection team, which is a real thing. Look it up. I tell people all the time. And they buy the debt market. So all of this, when you can't just, create cash from nothing and expect there not to be fallout. And fallout is inflation. A central bank's power resides in only one thing, one thing only, and that is ability to inflate. If we can take away a central bank's ability to issue debt, or inflate, they die. We had an opportunity recently with this whole debt ceiling. You remember all the panic, Janet yelling, "Oh, we got to do something, we got to do something." No, because they understood the moment. The moment we just default, if we would have defaulted on the debt, that would have started to kill the Federal Reserve. It would have also caused a great deal of economic turmoil. But we could have ended central banking. And if one central bank falls, you start the domino effect, and they all fall. Again, their power resides in their ability to inflate. And you have politicians, so our so-called government, which is not our government, again, it's the central banks that run the world here, looking for every reason and every excuse to continue to inflate, to fund this, to fund that, to fund the other thing. In the last month, we've watched the national debt go up nearly $1 trillion. $1 trillion. Central banks are trying desperately to convince us that by raising rates, eventually a miracle is going to happen and inflation is going to drop. No, that it has nothing to do with that. The reason why a central bank raises rates is to cut off the availability of credit to especially small businesses who are dying because of this whole mechanism here, fulfill the corporate agenda because they can weather pretty much everything here, and to crush the consumer. That's what they're doing. They're deliberately killing the economy. Now, if a central bank really, honestly wanted to stop inflation, they can do one thing. Any central bank has the power to do this. They go to the larger institutions and they say, hey, you know what we're going to do? We're going to have you raise your capital reserve requirements above zero. We have a zero reserve requirement right now in the United States and most developed nations around the world. A zero. In other words, these major institutions have to hold no cash in reserve. If, in fact, the Federal Reserve were to say to the Wall Street institutions, okay, everyone, you got to raise your capital reserves, what would that do? It would instantly contract the money supply. It's a money supply problem. They've been inflating since 2008, creating cash out of nothing. All of these bills chasing the same amount of goods. Sounds logical, right? That's why we're seeing inflation. Now, if we could contract the money supply, even just a little bit, that would slow inflation, it would stop it in its tracks. But no, the lie or the fable that continues to be sold to the people of the world is, we're gonna raise rates, and eventually a miracle is gonna happen. This is a lie. It's been a lie since day one, and people are buying it. Why? Because they don't know any better. If people really understood the financial system, how it actually works, they'd be running for the hills. This is the truth. Very few people have an acute understanding of how the financial system works. And you don't learn this stuff in business school. You gotta sit down and you gotta dig through this. You gotta do, I have studied the markets more so than when I studied medicine. I practiced for 20 freaking years medicine. I studied the markets more so than I had to study medicine to understand it. Because this thing is on a new level and it just keeps getting worse.